All right, welcome everyone. We are here today with Amenity CEO Nate Storch, VP of Product Viral Shah, and data scientist Bennett Salzman. We are here to talk to you about some key ESG narratives from this most recent earnings season. And throughout the conversation, we want it to be interactive. So if you have questions, please, send them over to me and I'll ask them out. There's also going to be a 5-minute time at the end to also ask any questions that you might have. All right, take it away, guys.
Thanks, Juan. Appreciate the introduction there, and welcome to everyone joining us today. We're excited to be here to talk about what we're seeing, in this most recent set of earnings call on the key topic of ESG. Over the past couple of years, ESG has emerged as a core area of focus for us at Amenity, and our core belief is that that these factors are becoming a meaningful part of just about every company's strategy. And for investors, you could no longer afford to let these issues take a backseat in terms of your investment process. The best measure of this, the best evidence of this, is the market impact. Over the past year, 80% of sustainable focused funds have outperformed the indices, and assets are following. Sustainable funds have more than doubled in terms of AUM over the past year. Now, markets, through my career as an investor, I was always amazed at how efficient they were in discounting risk. And as far as ESG issues go, this is no different. And we're seeing this translate into a pretty stunning valuation gap between the companies that are leaning into sustainable strategies, that are leaning into their ESG strategies, and those that aren't. And the market is very attuned to this. They're demanding more disclosure from companies. They're demanding more transparency from companies. And this is now presenting a major challenge for capital markets participants. Now that they have all of this information, how do you understand those ESG narratives? How do you make those clear? How do you measure it? How do you measure when those change and how those change, and how does that change impact your portfolio? How do you compare one company to another and to the rest of its peers, to its sector, and provide verifiable data that back up your investment decisions based on these important criteria? These are all new and emerging issues, new challenges for the buy side, the sell side, for all capital markets participants. And an Amenity, this for us is a major challenge and a major focus. We have trained our NLP models specifically to track and measure ESG narratives. Those that are coming from companies and their earnings reports, how they're picked up in the news and other sources. And we're working with our clients to understand how ESG narratives are being reflected in their internal documents. And so today we're going to focus on the first of those areas, how ESG narratives are being discussed and disclosed in earnings calls. And for that, I'm going to turn things over to Bennett Salzman, who is our lead ESG analyst, and let him walk through some of our findings from this most recent set of earnings calls. So, Bennett, the floor is yours.
Great, thank you so much, Nate. Yeah, this has been a really exciting quarter to watch the trends evolve in terms of company disclosures. Really seeing some macro conditions accelerate pre-existing trends around an increased investor focus on ESG. And what we're going to walk through today are some of those macro trends that we're seeing shape up across the social and environmental dimensions, as well as the historical lens that we're able to provide by analyzing his time series of earnings calls. And to start off, what we've been seeing, especially this quarter, is that analysts are asking about ESG, and companies are answering. So, analysts specifically saying in their questions when they could be asking about anything, I want to focus on ESG. What is your company doing or planning on doing in ESG? And then the companies in response having dedicated slides prepared, as well as using earnings calls to enhance their ESG communication. And ESG is a really interesting concept as it comes to communication. Companies have a variety of avenues that they can use to get their message across. And historically, we've seen that been in company reported surveys, sustainability reports, press releases, and news coverage. And increasingly, we're now seeing them turn to both SEC filings as well as their earnings calls as a place where investors are similarly expecting conversation in those formal documents around their ESG initiatives. And if we look over time, we do see that trend reflected in the past 3 quarters. So noticeably in 2020, we've seen the percentage of companies that are discussing ESG in their earnings calls rise. Broaching almost 70%, maybe down to 65% in this recent quarter. Historically, it's been around 50%. And the interesting nuance here is breaking that down by dimensions. And we can see that off the bat, in the recent quarters, the percentage of companies that have been discussing social issues has skyrocketed. So that's one of the first macro trends that we're going to dig into today to understand why we've seen that dramatic increase. But it's not alone. You can note that there are increases in the environmental and general dimensions as well. And the percentage of companies is what we're leading with. But this is a little bit misleading because we've seen FactSet, which is the source for the earnings calls analyzed in this presentation, and in Amenity Safeguard, which is our off-the-shelf ESG solution, we've seen an increase in the number of overall companies. So back in 2015, that was roughly 5,000 firms. Recently, in the most recent quarter, there were roughly 7,000 firms. So even if we're seeing that there is hovering around 50%, the overall number of firms discussing ESG is increasing. And we can see that in the strict count where we're looking over time, and we see that there is a slight upward trend over the past 5 years in overall ESG commentary. Noticeably, we had some peaks around ESG mentions in Q1 and environmental, similarly in Q1, where we saw significant increases before we saw that big social spike in Q2 that then actively traded off against some of those environmental and governance and more general ESG statements. Now, this is setting the stage for what we're going to drill into to help explain what we're seeing on a deep thematic level, why these trends are existing. But before I do that, I wanted to throw it back to Nate for a high-level question. You have a history as an investor. When you were actively investing, did you notice companies using earnings calls as a way to communicate ESG activities? If you're reading through them, do you care about what they're speaking about in terms of their human capital or perhaps workplace safety?
I think that there was always an element that we tried to capture in terms of understanding a company's culture. Understanding whether the competitive edge that we were looking to capture for a company was something that was real and sustainable. Part of what we looked for was how they conducted themselves. So, especially in terms of social, those issues were important. We liked companies that had strong governance, and it was really clear that they had a good relationship with their shareholders and respected their shareholders. And I would say that the one that really has changed for us that we didn't use, this was a while ago when I was back in the markets now, probably 7 or 8 years ago, was environmental. And that was really thought of as being a fringe issue. And that couldn't be any further from the truth today, where we're seeing sustainability risk really get priced in to the multiple for a lot of different companies, and especially in the energy space, where we're seeing the companies that are being aggressive about transforming their business get a much higher valuation than those that are lagging behind. And look no further than ExxonMobil getting removed from the Dow, and I think that that NextAir now is the largest, which is a renewable company, as the largest market cap of any company in the energy sector. So there have been some pretty stunning changes over the course of the last decade as far as how to understand what environmental risk means for an individual company, what it means for your portfolio, what it means for the multiple that you can expect to see on any individual company that you're invested in.
Yep, absolutely. And I think that one of the things you note there, we're going to drill into in a second, but the sort of sector level view into these issues. It's one thing to have a slide that shows the historical trend for the entire market of firms that have earnings calls. What gets exciting is when you start looking at this for a sector that you care about, or your portfolio or your watch list, and we'll definitely discuss that. But the overall market is really useful to pinpoint some of the areas where we wanted to focus on today's call. So drilling in, let's get a little bit more specific. What is going on in Q3 and Q2, and what is driving that social divergence from historical normal patterns? And what we're seeing in the data, unsurprisingly perhaps, is that huge increase is being driven by commentary around workplace safety efforts in Q2, and then in Q3, predominantly conversation around diversity and inclusion, diversity, equity, and inclusion. And looking at the data, those increases are very notable when we break it down on a thematic level. And this is something that at Amenity we really pride ourselves on, being able to take that thematic approach to natural language processing and use it to drill into more granular analysis on a specific trend. So in Q2, what we were seeing was a dramatic increase in companies that were discussing COVID-related workplace safety measures. So social distancing, testing procedures, work from home. Obviously we're still in the midst of a global pandemic. So in Q3, and it'll be interesting to continue this into Q4 to see how companies are speaking about it. But we began to see a decline, a mean reversion in the workplace safety dimension, but that was offset by an increase in diversity and inclusion. So historically, not necessarily one of the primary focuses of companies in terms of their earnings call disclosures, but in recent quarters, in response to protests against police brutality, Black Lives Matter, companies and consumers and analysts have been asking firms where they stand, and earnings calls have been a place where they've begun, and this isn't as universal, but they've begun to make their stance clear. And as we were saying, looking at the sector level is really where we can start to draw some more specific insights. So with workplace safety, here we have the 5 years graphed down with each of the primary GIC sectors. And what we're able to see is that historically the firms and the sectors in the components of the economy that are most, use the most labor, for example, materials, utilities, energy, perhaps had the most OSHA complaints or conversation around fatality avoidance. Those are the sectors where historically we've seen workplace safety mentioned, and very little at firms like financials and communication services, where the workforce is less likely to use workers' compensation for a workplace injury. But historically, that's true. In recent quarters, almost across the board, we've seen a dramatic increase in 2020 in the conversation, particularly around this theme. So in the sectors that previously had a focus on workplace safety, we saw a quadrupling, a doubling for many of these sectors, pushing over half of the firms discussing workplace safety in those sectors. And even in those sectors like communication services, your Netflixes and Microsoft's and Alphabet's of the world, we do see commentary around, in this case, it was more work from home and similar workplace safety initiatives for bringing back workers. And one of the interesting abilities that we really leaned into when thinking about this quarter in a retrospective sense, we can demo with the financial sector where we saw almost no workplace safety conversation and then an increase in workplace safety, is the ability to then pinpoint some of the specific firms where we're changing these narratives. So we use diversity and inclusion to do that, where we saw the similar trend of consumer discretionary, communication services, some of the sectors that are more consumer reliant had a historical higher percentage, although this is still relatively low, percentage of firms that were speaking about D&I issues. And we saw some of the biggest increases then in those sectors, like financials again, where we jumped to 12%, 7%, one of the largest increases across the board here. And really, when you wanted to understand what's going on here, it's important to understand the earnings call component, but we also run into to really analyze news. And in Safeguard, we combine earnings calls and news, and with several of our other clients, SEC filings as well, to really understand some of these trends and analyze the movement of these companies on those specific dimensions. So this is a perceptual map that drills in on D&I specifically from the first half of 2020 to the second half of 2020. And this is built off of news sentiment and earnings calls, so a combination. And what we can see is that across the board, almost every company in this selected peer group in the financial sector saw a significant increase in the overall mentions. So moving from the bottom quadrants to broaching the top quadrants of high mentions in this normalized graph, comparing the sector. And similarly, we've seen a significant increase in sentiment across the board, where these companies, they're not necessarily only talking more, they're continuing to talk quite positively about these issues. Whether it's Citigroup, which had one of the largest increases, they importantly released a significant amount of research describing the economic cost of inequality that got a significant amount of press, as well as many initiatives for Citigroup and Bank of America that historically have placed a significant focus on D&I. And on a sector level, the shift and increase in focus in D&I is even more apparent when we're looking at news mentions. So in this past quarter, you can see in this primary graph on your screen, we saw a 4x increase in weekly mentions leading into June and July, specifically on that diversity and inclusion theme, while the sentiment remained largely positive. So towards the top of our negative 100 to 100 range. And what this tells us is that the trends that we're seeing in earnings calls is resonating in news. News is the primary place for this conversation, and in many cases where companies were releasing press releases describing their initiatives, but that has been backed up by the formal channel of their earnings call, where they can make a clear commitment on those issues. And if you want to reach out and see what this looks like on some of your portfolios, to understand what firms in your watch lists have been increasing their D&I focus, shoot us a message, and we're happy to help you understand some of that analysis. But I think the question really becomes, and perhaps it's a little bit premature to answer this authoritatively, but I'd love to get your thoughts, Nate and Viral. Do you think we're going to see a mean revision on these important issues like workplace safety, diversity, and inclusion, or do you think we're going to continue to see it increase not only in these categories, but sort of across the board with ESG and earnings calls.
My sense is, I think when you look at a lot of our signals, this one, it trends to the positive side because companies tend to issue, positive updates about the initiatives they're undertaking. And so like that baseline ends up, being the 70s where it's lower on some of our other signals. But I think that, to your point, I think the conversation, the way that it's evolving, like if anything, there's continues to be more and more scrutiny around like the actual source of the commentary, whether it's third-party news versus company issued statements. And so if anything, it'll become a more and more sophisticated analysis over time, and it'll be less about just taking company statements at face value.
And my perspective is that companies are trying to be out in front of the issues that are meaningful to their employees and their other stakeholders. And I think that diversity and inclusion is one that in today's world is just absolute key to being able to create a workplace environment that provides the best and brightest with the experience that they want to have, the overall workplace experience. So I think it's a sign of the times and what companies really have to do in order to attract tier 1 personnel. So I think this is a way for investors, for companies, for other stakeholders to really monitor the activities that their companies are undertaking around diversity and inclusion, and the impact that it's having. Is it catching hold? Is it getting attention? Are they using their bullhorn to really get their message across effectively? So I look at that as being one that's very much sustainable. Now, for workplace safety, I look at that as being more short term, because I think that is a real product of Corona. So as hopefully Corona concerns over the next several quarters fade to the background as the vaccine or vaccines now have the impact that we want, and we develop more of a focus on a sustainable work culture versus workplace safety, I think we'll see a shift in that dynamic. Now, I think it's important and an absolutely fascinating topic to think about how how work styles are going to change over the coming quarters post COVID. But I think it's a different issue than the ones that we're talking about, which are really focused on workplace safety.
Yeah, I agree. I think that's actually a powerful insight, where we might expect to see the companies that are going to switch from investing in mechanisms to just make the workplace safer to commentary that we would capture in our human capital event type around companies that are making investments in their workers, continuing with the transformation of work that we're seeing, but having a sort of switch in the thematic narrative from how are we having a temperature check at the door to how are we balancing work from home with in-office performance, and giving our workers the tools that they need to be empowered. And for us, one of the interesting findings in this analysis was that workplace safety had traded off against some of the commentary on pollution management, on clean technology. Many of those issues that Nate said were gaining more importance. It almost seemed, if we just were looking at Q2, that companies had made a decision that their efforts to reduce their pollution or discuss those were now going to be taking a backseat to their efforts to just make their workers safe and sort of more of a short-term perspective. And that was frankly concerning. But in Q3, we're beginning to see signs of a rebound. So perhaps a short-lived displacement of focus. Analysts weren't asking about their environmental actions. They were really focused on short-term business in a market correction and workers. which makes sense, but we're beginning to see a rebound. So let's drill into that a little bit in these last few minutes and see what's going on here. And again, looking at that thematic perspective, the counts over time, what we're able to see is that there are two leading event types. So especially in Q1 and then the bounce back in Q3 of 2020, pollution management and clean technology have taken front and center their place as the major focus of commentary on these earnings calls. And this is a narrative that, again, we begin to see play out on that sector level breakdown. So in terms of pollution management, pollution management across the board, a lot of companies that are consumer facing, so consumer discretionary, is one of the leaders in this field in terms of the sector level comparison, saw a noted increase going into 2020. That's similar largely across the board, with the exception of energy. But if we drill in on clean technology, the narrative flips. We see that sectors like energy, utilities, industrials, those are the firms that are really leading the drive towards conversations around the business model shift and clean technology, and really trying to determine, as we wrote about in one of our recent blog posts, who of the oil and gas majors can make the transition to become a player in the renewable market. And over time, we've seen a roughly 10%, 20% in the energy sector increase in the amount of firms in these sectors that are discussing these issues. So the trend here is relatively clear, and particularly with energy, we're seeing it consistently over time to have that increase, and that's really, really interesting. And a little bit of a plug here. What we're able to do is take it to that next place. So if we're concerned and interested in a topic spotlight, we can really drill in on a theme like clean technology and understand for a topic of hydrogen, a component of clean technology. That's one of the topics where we're seeing this increase.
So in Q2, before we jump into hydrogen, can you go back one? I just wanted to highlight something about what our NLP approach can highlight for an ESG investor relative to the traditional legacy-based, survey-based approach to looking at considerations. This kind of commentary and the change that you see, quarter on quarter, and the delta in the way that these companies are operating is really hard to observe if you're using the historical survey-based approach to how companies have responded to a once-a-year query on what their initiatives are and what their footprint looks like. Here you can see the delta, and if you look at like the leading ESG investors, I think Aviva put out a note a couple days ago just talking about this. They're not focused on where things have been historically. Investors know what carbon footprints look like, what the historical legacy businesses of these companies are. But if you want to know where the puck is going, like where investors and where companies are really focused, the meaning of ESG has shifted to being much more around what are companies doing that's in their locus of control to become more ESG friendly. And so whether on a relative basis, finding the best companies in the industry that you're covering and that you're benchmarked against, or finding like the best standalone opportunities, it's much more becoming about the kind of commentary and the kind of real initiatives that companies are putting into place around ESG. And that's the kind of thing you can only track if you're looking at a real breadth of sources and you're looking at primary information and secondary information, and you're looking at it on a very frequent basis.
Yeah, exactly. Great point. And the hydrogen example there is, I think, actually very supportive of that analysis, because what we're seeing is that if you notice this sort of macro trend, you can really pinpoint it and drill into what's driving it. So as I was saying, 11 companies in Q2, that dramatically increased following that fourfold increase to 49 companies, almost 50 in Q3, that are discussing hydrogen. And a little bit of a plug here, I pulled this slide from a upcoming newsletter that'll be going out to inboxes tomorrow. Our team did a spotlight on what this looks like in practice. So a company like BP, they recently partnered to produce renewable hydrogen from wind energy. In the utility space, the leader in terms of clean technology, we have E.ON, which is a company, I believe, in Germany, that's working to create a project that will convert a natural gas pipeline into a pure hydrogen system. And we have Bloom Energy, a company in the industrial sector, that has installed fuel cell sites in South Korea and Southern California, and has plans to offer fuel cells that are completely renewable. So these are the specific examples of companies that are placing an increased focus on a variety of different clean technologies. And in this deck, we're showing you the sort of macro trends. In Safeguard, we really allow you to drill down to understand the specific topics that are driving on a portfolio or company level those thematic increases.
And by the way, if you want to be on that list, just email us at contact@amenityanalytics.com, and we're happy to put you on our distribution.
Yep, exactly. Juan's actually, I believe, just going to throw in the chat a URL where you can click to sign up for the spotlights that we are sending out as weekly emails. So you could get this in your inbox and then see the other content on our website. And we also have some really interesting product developments that I'll pass it off to Viral to describe around other ways that you might get an alert when BP announces that partnership and starts to become more positive, deviating from a historical average. So that's a little tease, but Viral, could you describe a little bit more of what we're doing here?
Around the alert side?
Yes.
Great. Yeah. So, one thing is that every investor has their own workflow. You want to know when information is changing and how it compares to the previous baseline that you understood. And so, as you know, we ingest news from hundreds of thousands of sources globally, and we are able to extract out all of the evidence related to ESG issues across a very broad taxonomy and then score that. So you can understand what that looks like on a time series basis, what it looks like for one company versus another, and know when there is a meaningful shift underway. And so our ESG alert allows you to bring in either your own watch list or any sector that you follow actively and subscribe to an alert. And then every day or every week, depending on the frequency you choose, you get an update across your universe of all the companies where there's notable changes versus that baseline. And so here you can see for Ford, there's a number of things. You can see that there's actually 3 extractions from the same article about a massive, green energy objective that they're looking to accomplish. And so, I'll remind you again, about our NLP. We're able to extract exactly, how that relates to Ford. And so, we don't have false positives around, things that are being ascribed to a specific industry as opposed to the company, or when there's something that's not a relative improvement in the company's underlying performance in this area. And so what this does is it will push you, this alert, you'll receive it in your inbox, and you can click through into our dashboard and see exactly how this is evolving over time. And so if you want to sign up for this, contact us at amenityanalytics.com is the email address, and we're happy to set you up with a complimentary setup for this.
Yep, really exciting, and a way to take the narratives that we're discussing here and get told about them before we have a webinar to recap the quarter. So consider it your cheat sheet on what's going on for your watch list. So that concludes the retrospective. Again, we think that there's really interesting trends that we're seeing in terms of earnings calls as a source of ESG information. We expect that to only continue into Q4 and to 2021. If you have any questions, feel free to shoot us an email at contact@amenity.analytics.com, or if you'd like to see this presentation and drill into it a little bit more on your own time, happy to send it over. But thank you all for joining today. I know we ran a little bit long, but hope it was interesting, and have a great afternoon or morning, everybody.
Yep, great. Thanks, everyone.
Thanks, Bennett. Thanks, Viral. Thanks, everyone, for tuning in. Have a great day.